Welcome back to another episode of Crypto and Things. I'm your host, Scott Cunningham, aka Scott C Business, and today we are going to be going through the 3 templates that I use for stock investing, budgeting, and tracking income and dividends coming in from my investments. So we're going to be going through these different templates because I believe they are so important to personal finance. And if you believe at all that me growing my wealth by $50,000 in the past year was a success, definitely some of that is going to be attributable to using these for tracking and just staying on top of my budget and all my personal finance related stuff. I'm sure there's many apps that can do a lot of this, but a lot of things that I've found, they might only cover US stocks, they might only cover Canadian stocks. They might offer some stuff, but then they have premiums for the rest of the things that you need. With all of that being said, I decided, you know what, let's just get a decent spreadsheet and do it the old-fashioned way. So I'm sure there are many apps and things out there that you can do all the same stuff, but I'd rather just have something very robust and being able to edit it as I want is a lot more easy and just convenient rather than being stuck with what the app might offer you. So with that being said, let's dive in. But just before that, let me know how my audio is sounding. I'm trying to get the correct distance from the microphone for the best sounding audio. Previously, I've had a pop screen in between me and the mic on top of what's already on it. And that really helped with the audio for like pop sounds. But I'm hoping that this is like the correct distance because I know that it's a little bit distracting with that giant pop filter kind of covering half my face. So let me know in the comments, do you think that the audio suffering is worse than not being able to see me? Or, let me know what your preference is compared to some of my previous videos. And how this sounds in comparison. But with that being said, let's get into this. By the way, I'm not selling anything. All of these templates are going to be included in the description for you guys to download and start using. I've been using these for probably over a year now, and I swear by them. They absolutely are so key to having to achieving financial success and just staying on top of your personal finance. So with that being said, let's dive into the stock investing template and take a look at how this works. And I'll kind of explain what you need to do as you go through and use this. Most of this is just plugging in the information and then just adjusting this ever so slightly to fit that new information that you've plugged in. So here is the dividend side of things. You can see that we have an ETF and then we have Apple. And when you actually take a look at all this information, there is quite a bit. You don't actually have to use all of this. Like, for example, I like to stay on top of, when did I make a buy? What changes were made? It helps me because then it's easier for people to follow along when I do videos. But, all these things may not be as important to you. Also, another thing to keep in mind is whenever you are putting money into your investment accounts, you should be tracking that because you can only make a certain amount of contributions to your TFSA before you will start getting taxed based on your age. And I'm not sure exactly how this works in the US, but I have a suspicion that it's probably very similar to how it works in Canada. And it doesn't matter how much you make as long as you stay in and you keep using that. But based on the amounts that you're actually depositing, the principal being invested, you can only do a certain amount before you start getting taxed and having all these issues because a TFSA, a tax-free savings account, only goes to a certain limit for the contributions that you can make year after year. Here in Canada, every year after you turn 18, you can put another $5,000 into your TFSA as a contribution. But regardless of how much you actually make and how much ends up being in the account, that's not important. It's just what you're depositing. So very important to keep track of that. Now, with that being said, let's really dive into this. So I think the best way to explain a lot of this is for me to add a new stock to the list to kind of give you an idea. So say we're doing Microsoft. Whether you know the ticker, which is MSFT, or you actually just type out Microsoft, then you want to go over to data, click on this, and then hit stocks. This will change the data type so that it's the actual stock. And then all of these things that I've added in, and you can add your own or take things out as you need, all populate automatically when you've got the stock added. One thing to keep in mind is if you're trading in Canada and the US, for your own sake, it probably makes sense to list everything in the same currency. So I have columns for converting from US to Canadian. If you're in the US, just do the opposite conversions, obviously, and then just having your region here so you're able to keep track of where they are coming from. To caveat that, like just so you can sort of see the difference automatically, this is the actual exchange it's being listed on, and then this is the stock ticker. So XNAS is in the US, whereas XTSE, which is a Toronto exchange, that is in Canada. So that's how I know right away. But if you're actually literally buying the stock, you should normally see where it's from, and then you can kind of go from there. So again, if you're not even investing in other countries and you're just doing it all with one currency, like if you're in the US and you're just investing in US stocks, you don't even have to worry about this aspect. It's just something to keep in mind. And if you get the wrong stock consistently, you can click stocks, and if it's not giving you the right one that you want, you'll be able to pull up something on the side here. Here, let's think of an example. So if you type in something that doesn't automatically get solved, it'll bring up the data selector. And I'm sure there's another way to navigate to this, but then you can actually search for the specific stock that you're looking for, and it'll also give you all the exchanges. So even if we're doing Microsoft, but we were trading on a specific exchange, it does help to have the correct exchange listed so that it'll be in the right currency. For example, like if someone in Mexico was investing in Microsoft, they might want to use this Mexican stock exchange because then it'll list it in the correct dollar value. Again, I mean, I have this thing for conversion for USD and Canadian dollars, but regardless of where you live, you can just change the names of these and adjust the values accordingly. Wherever you live, obviously, just make sure you keep that in mind so that you don't have values that appear very, very different from what they should. So we're just going to use the NASDAQ, which is what they already used originally. So that's what you can see there. Now, it's also good to have the sector listed so that you can kind of see a decent breakdown of what's available. This list here that you see, you can obviously change this and do this whatever you want, but this is just pulling from this list that I have here. So you can add to this and do whatever you want, and that will update these data values that you can pick from. But essentially, it's just so that at the end of the day, you can see a full breakdown of how you're invested, and then obviously, ideally, you would diversify in many different sectors, and then you can kind of see a good overview of your portfolio that way. So say we bought one Microsoft stock, we type in 1 to the shares. If you want to keep up with the changes and everything, I like to do this because I show my stock portfolio to people every month, and it's nice to have the exact changes and when they happened. Or if you're just, wanting to keep on top of the different things you're doing, this is how I would do it. But, you don't have to do all the exact same things. It's not 100% important, but it's good to just be aware of. Some people may want to use like an application that has a lot more to it, but this is much more easily editable, and you can get it to what you want it to be. If you have no experience whatsoever using Excel, your best bet is to just use this and just kind of plug in things rather than trying to change a lot of different things. Essentially, the way that this works is when you have your stocks here, right? So everything is listed in column E. So for all these different values that automatically update, for the ticker symbols, which is this column, it's E4 dot ticker symbol. So E4 is for Microsoft here, and then it gives you the ticker symbol for Microsoft. Regardless of what you want to actually see, it's going to be denoted by the actual spot that it's located in, the cell, dot, and then whatever values or whatever you're trying to get that auto-populates. So this is the price. We have the 52-week high. So there's a lot of different things that you can get automatically populated. One of the only things that you can't get, unfortunately, is dividend yields. So you do have to update that yourself. I know on Google Sheets, there's ways to do that for US stocks, but I couldn't find it for Canadian stocks. So I decided, you know what, I'm just going to use Excel, but I'm sure you could do a lot of this stuff using an Apple equivalent or a Google Sheet equivalent. So with that being said, let's kind of go through all of this. Obviously, if it's a US related stock and it's going to be in a US dollar value, I have the regions here so I know, and then I can convert the values as needed. For this section with booking costs, this is essentially just if you have to pay any fees when you're buying stock. So for example, when I buy through my bank, I have to pay a $10 fee every time I trade. So this is just, you know, taking in what you've done and then adding the actual booking cost to it so that you've got that information there. For the Canadian value, obviously it's not going to change. You can see that I'm actually slightly up. So when I bought it, it was $206.25 in total for the 5 shares, and now it is currently worth $224. So the realized gain over here, or unrealized rather, because it's only realized when you sell it, the unrealized gain is $17.95 when you take into account the $10 booking cost fee. But it has gone up significantly since then, so that's awesome. And the way that you actually track this is when you buy it, you have to also type in the average purchase price. So say when I originally bought this, it was like $40, but then when you take into account the $10 fee, it comes to $41.25. That's essentially what it is. That's obviously not exactly what it was. But again, if you don't have any booking costs or anything like that, then you don't have any issues with average purchase price until you buy at a different price. So say if you originally bought it at some price and then you decide to buy more, well, now you want to go in and update the average purchase price to reflect the other values that you've bought at so that you can still accurately track the gains. So you have the most accurate representation. So for example, if I now bought it at $44.84, then I would have to, depending on how many stocks I bought, I would have to calculate what is the actual average purchase price of all of that together, and then have that here so that I can get the most accurate take on my gains or losses. So say we bought some more today and that ended up pushing this up to, say $42.80. Then you can see how everything just updates, and then our unrealized gain is only $10. But that's not actually the case. And then here for change, it shows you the percentage change for the unrealized gain. Then you've got your yearly dividend payout, which is calculated based on the dividend yield, which you have to input yourself, but then it will kind of populate everything else as needed. Price opportunity is something that I like to look for. All this is taking is it's looking at the current price and then comparing it to the 52-week high and the 52-week low. So currently, this ETF is at an all-time high in the past 52 weeks. So you can see that the price opportunity is 0 because it hasn't dipped at all. Whereas Apple, at one point in the past 52 weeks, was $137.98. Today, it is only worth $120. So there is a price opportunity there of 13% that you could potentially make if it goes back up to all-time highs. So this is just a good way for you to kind of gauge what might be a better opportunity to be buying But obviously, you still have to make sure you keep up with the news regarding that stock so you're not buying it while it's failing. I believe that Microsoft and Apple will absolutely go back and pass their all-time highs. So these price opportunities are just a good indicator to me that I can get the stock for a little bit less than what it might be worth in the future. But again, these don't actually, these aren't what you should go buy strictly, because, you don't only go for price opportunity. If there's stocks that are good stocks, you should be getting those. If they have good fundamentals, get those. Going for strictly price opportunity could be more risky. Same with like a very high dividend yield. Of course, it looks much more ideal, but they're definitely much more risky. So while none of this is a financial advice, this is really just for you to be able to follow along and do the things that I've been doing to sort of achieve the same sort of outcome, at least in terms of tracking your finances and staying 100% on top of your personal finance. Then you can also just list how frequently the dividend income is coming in. These aren't actually accurate to these. This is just what I had there at the time. And then you've got the actual trading volume. The more a stock or ETF is trading, obviously the better. ETFs are going to be trading at a significantly less volume. So always keep that in mind. And then you actually got the type, so you can keep track of ETFs versus stocks. And then it gives you the actual name of the company, like through and through, rather than just the stock label, which is what we have here. And then this is the actual name of the company. And then I have the platform that you might have actually traded it on, because I traded on multiple platforms. And then a link to the actual stock on, Finance Yahoo, so I can just keep up with that very easily. But, you don't have to use all these different columns. The main thing that's probably important to you is just being able to track the actual stocks themselves and keep on top of the dividends. So now, so that this is actually accurate, because obviously, as you can see by the weight here, this is like the weight of your portfolio. This does not add up to 100, so this is incorrect. And that's simply because these values here at the bottom, which is the sum of all of the stocks and the value and everything that you've got, you have to make sure that these are updated for the new stocks. So all you really have to do is just ensure that they're included in this summary. So it's just adding them all up for you. You just got to make sure to either drag this box down to include for it, or you actually change the value itself here. So previously it was 3, and you can just type in 4, and then it's got the right value. So that's the simplest way to do that. And then you want to go through all of these and do the same thing. The easiest way you could do that is just copy paste the formula across here, and then it'll update. Not for this one though, because I also have the trade costs added. So I'm just going to add that myself. And then it also takes into account, because this is for the booking fees column, it also takes into account any trading costs that you might have added that you don't have in the price itself. Again, if you're doing zero commission trading, most of that isn't even a concern to you. But it's good to have in case you are spending money on your trades. And then here we have the total unrealized gains, the percentage of unrealized gains, which again, you have to make sure you update for all this, because here I did not include the booking fees at all, because the average purchase price is not added. So we got to make sure to go and add that first. So say we bought this on an exchange where there was no trading fees, you would just write it out as exactly the value that it was when you bought it. So if I bought it for $215.08, that's what it is. It's $215.08, and that should update everything accordingly. And then we would have to add in the dividend yield to actually have that. And I can't remember what it was exactly. And instead of wasting time checking, let's just say it was 1%. So 1%. Now this should have everything inputted to the correct values. So if I scroll back down, There we go. That's much more accurate. So you can see that the unrealized gain is I'm 1% up, 1.42% up, and $7.95 have been gained unrealized. Because again, unrealized just means you haven't actually sold it. So you haven't technically made those gains yet because it could go down. This is just essentially what you could make if you sold right now. So you can see that we're $10 down on Apple because of the $10 trading fee that I inputted. And this is just how you can track this. And this will all automatically update every single day when I come on and I look at this. You just have to make sure to click refresh all, and then it will update according to the current market conditions. So you can see since we bought Microsoft and refreshed, it has gone down ever so slightly, and now we are 30 cents in the red. So that's not terrible, but it's useful to have this information and being able to just stay 100% on top of this. So then when we look at like the dividend yield, it's taking, you can see this is what we would make every year from these stocks. So about a little over $5. And you can scroll down to the bottom here. And we just have to make sure to, again, update this for the new stocks that we've added. Always important to do that. And then you can see that it is now $5.76 per year. And then this takes that and divides it by 12, so you can get the average monthly. So from an investment of $562.98, we're getting $5.76 a year, which is 48 cents a month. And that is an average dividend yield. Got to make sure that, so this has the entire column, and then you just divide it by the amount of actual dividends that are there, because that's how we'll get the average. So because there's 3, the average dividend yield from these 3 stocks is 0.97%, which is how we get the 5.76. Again, this isn't 100% accurate because I need to convert these values from US dollars to Canadian dollars. I have done that with Apple, as you can see here, but I have not yet done that for Microsoft. So to give you the example here, you use an asterisk to multiply, and you can either just type in the conversion value. So if you were in the States, it's like 0.69 or whatever. And if you're in Canada, it's 1.31. I like to just click on this so that every single stock that connects to this, I can just easily change it by just changing this value. So say it was actually 1.32 now, I would just update that, and then these values would update accordingly. So that does make it much, much easier for me to track everything very efficiently. Again, you guys don't have to worry about this if you're only trading in one currency, because I know this is a little bit annoying, and it seems a little bit cumbersome at first, but if you want to have obviously the most accurate representation of your wealth, this is going to be the way to do that. If you're really lazy, you don't have to bother converting. I mean, it's not like it's actually going to change the values or anything, even if you just kept these in US, but the value that you'll see at the bottom won't necessarily be the correct updated value. So, that's something to consider, because this is what you would see if it was all just the same value. But this is if you actually convert it to Canadian dollars. And that's just the most accurate representation that we have here. And then what I also have here is if you want to include the cash that's in your account to see the total value, you can also do that as well. Again, just to see a more holistic overall view of everything you're doing. Again, if there's extra things that are starting to get confusing, you don't have to worry about that. Like if you're like, look, I don't care about the cash that's in my account, I just want to worry about the actual values here. And the actual investments, and not really worry about the cash. You don't need to track that. Again, I'm just kind of giving you all the tools in case you want to be extremely, extremely specific and in depth with how you track everything. But this is the actual Canadian value. So this gives us a much better idea. And again, if you want to get the correct dividend payouts, you would have to convert the dividends as well to Canadian dollars, which I don't actually have set in here. So let me quickly add this for you guys just to make sure that we've got everything covered. And the thing is, if you're going to have a mix of stocks, you should only really be paying attention to the converted values, because the other values are misleading because they're mixed. So you want to convert it all to one currency and then just use that, because that's definitely the easiest way to do it. Again, as long as you know which currencies are which, it's not a huge concern. But again, this is a mix of Canadian and US, so we don't actually know exactly what the correct value is going to be for Canadian dollars. So instead, we're going to... So because this is Canadian, I'm just going to hit equal sign and then click this, so that'll just stay the same. But because this one is US, I'm going to click on it. And you always do equals to start a function. And then now that I've got this cell, again, I do asterisk, and then I can go down and multiply it by the Canadian value, and then hit enter, and then it updates. So you can see now there is a difference there. But the good thing is, once you've got that set, you can just copy this and go down one, and it should update accordingly. Oh no, sorry. It will move them both down. So to ensure that this stays in the correct spot, you have to use an absolute value. I know this is getting a little confusing for people who aren't super familiar with spreadsheets. However, again, if you're trading all in the same currency, most of this is kind of irrelevant to you and you can just skip over this. But if you're using an absolute value, you just have to put dollar signs before the letter and the cell number, which really just means that it will always use this value. And as we go through and add it, and like, you could easily just now copy and paste this all the way down and it'll just all update, which maybe I should just have that to begin with. That's probably what I'll do. I'll update this so that that is just like that already, so you guys don't have to worry about things like that. I want to make this as easy as possible for you to just plug in values, because I know it's starting to feel a little overwhelming. But again, if you're just doing the same currencies, most of this is not a super big concern. But you can see, though, there is definitely a big difference here in terms of the actual values when we're looking at Canadian dollars versus American dollars. So if I then took this here, and I can just copy and paste this, you can see that for Canadian dollars, it's $6.71, which is 56 cents a month on average. So the actual percentage hasn't changed. Nothing has really changed. This is just making sure that all the values are in the same currency so that we can see the most accurate representation of my wealth and of your wealth. So that is mostly it, you guys. I know it's a little confusing, but say then you decided to sell, you hit 0, it zeroes out everything, and then you can just delete the average purchase price and the dividend yield, so that when you put in a new stock, it will update to the correct stock. And just so that you guys get another example, let's do TD Canada Trust, which is a bank here in Canada. So you click stocks, updates. So this is using the New York Stock Exchange. So because I want it to be Canadian dollars, I'm just going to use this, which is XTSE. If you do want to make your life easier, actually, you could just do everything in the US stock market if it's tradable there, and then you wouldn't have to convert any values or do anything like that, which would definitely save you a lot of time. So XTSETD. Yeah, there we go. And you just click the stocks again and then it updates. So now we'll say we have 1. So it's updated there. And let's update the average purchase price. So say I bought one, but there was a $10 fee. That means on average, I spent $77.02, which means I am at a deficit of $10, which is fine because that was the trading fee. If you're using a platform that doesn't have trading fees, then you are completely even. We go over here and we update the dividend yield. I believe last time I checked, it was like 5.34, somewhere around that. So this is what we have in total. Again, though, because this isn't a US stock, make sure that this isn't duplicating converting over. So you can either just do equals and then click on this so that it's accurate, or you can copy the previous one that did the same thing. And then if we scroll down to the bottom, again, you can see without converting, it's a little inaccurate because of mixed values again. But then here, this is the correct value if we were to actually convert everything in the correct way. And again, here you can see the values. They're significantly less because Microsoft is a much more expensive stock. So that's not really a concern. But again, you can see the unrealized gains, the percentage of the gain. You can see your dividends, all that great stuff. When we're actually looking at the breakdown here, you do have to update this. So you could either do this manually or you could do what I do, where again, I click equals. And then I have all my technology stuff together. So then I just drag over these two. And that gives me the update for that. Oh, sorry, no. You have to do sum. And it gives you the total of both, which is 2. Or you can do equals. Click on this, and then plus, and then click on this, and then equals. And then that's 2. And then you've also got to add the weights so that you have the correct representation here. So now you can see that it's at 100%. This is just your goals of what you're trying to get. So, you can kind of follow along and change that as needed. But this should accurately represent the weight of everything. You do have to update this a little bit manually, which is a little bit of a pain in the ass. But if you don't care to see the breakdown of your portfolio like this, then you don't really have to worry about this. This is just useful to see how your portfolio actually looks holistically from, a 20-foot view where you can just see everything and you'd be like, oh, I'm a little too much in one sector. This gives me a decent overview of that, so I know where to maybe change some things up. But yeah, so that's pretty much everything. That's for dividends. It's the exact same over here with growth stocks. The only real difference that you have to worry about is there's no dividends that you have to update. So there's a lot less manual work that goes into this. I do have to add in the US dollar conversions. I don't know why they're not here, but I will definitely add that into this as well. So that you guys have that information. But again, it's the same thing here. You would just update things down here at the bottom so that this gets updated. You buy stocks, you add the shares in here. They will update accordingly. Every day when you come on, make sure to refresh so that you get the correct values. And that's about it. Track your money transfers through here so that you can stay on top of your contributions. And then if you've got a bunch of stocks that you want to buy in the future, you can kind of lay that out here so that you can watch all of them. And then you can type in how much you want to buy, and then how much it's actually going to cost will just pop up automatically. So if I just want one, okay, so it'll be 56.66. Oh, let's buy 10, let's buy 5, let's buy 10. It'll just update accordingly. And this way you can kind of just get ready for any stocks that you might be buying in the future. And then same with growth. It's the same thing, just without the dividend yields. So hopefully that's straightforward. I also have something in case you have any other passive income that you have coming in from anything. Like I get royalty payments, so I track that in this. And this is just useful to have as well. But if you're just mainly focused on dividend and growth stuff, it's not really a big concern. I hope this was a good enough breakdown. I know it's a little bit confusing, you guys, but again, most of the confusing stuff is just converting values for US dollars and Canadian dollars. If you're just keeping it all in the same realm of things, the same currency, it's going to be a lot easier. Or again, if you're really lazy or you want to avoid the complexities, you can just write down, it's in Canadian dollars or US dollars, and then you don't actually have to convert it. You just got to be aware of that because, regardless if there's changes in prices and everything, you'll still see that it may not be the exact amount in terms of like the currency that you want to see it in, but it's still the same amount of percentage gain or loss and all that stuff. So all the information will still be accurate. It just won't be represented in maybe the right currency that you want to see it in. So that's the only kind of caveat I would say. And that's always dependent on the exchange that you're getting the information from. So again, I know it's a little confusing. This is the most confusing part. So I wanted to go through this first. Everything else is going to be way, way simpler. So yeah, let me know if there's anything that I missed, and I will make sure to include that. I'll also try to do like a blog breakdown of this and specifically highlight some of the more confusing parts of this to go through so that you guys can kind of go through along with the blog instead of maybe having to rewatch this whole video, because this is going to be a long video, it feels like. So with that being done, let's take a look at dividends and then we'll do the budget. So I originally got this template from the Joseph Carlson show, which is he's a great YouTuber. He does something very similar to what I do, but just with stocks, and he's much more successful than I am. So maybe you just watch him, but if you like my content, then I appreciate you for sticking around. What this is this is all of your dividends. So these are mine from when I first started, and you just go in and you add these values, and then based on the values that you type in, it will give you projected income based on your previous income. So I haven't actually updated it for October yet, so you can see the formula used is a little complex, but these are just projections based on how you've performed in the past. And then over here you write the actual amounts so that on this chart here you can see what you've actually earned, and then what it projected for you to earn, and then what future projections are based on how you perform going forward. So say in October, which I haven't actually calculated yet, I made $90. Everything else will update accordingly. But say I made less money, everything else will update accordingly. So it's very, very efficient, and it's very straightforward. This is really just to visualize and see how things are going and kind of give you that motivation to be like, oh, okay, awesome. If I keep doing it at this rate and I keep, putting in money and I keep doing what I'm doing, I should have a much higher projected income if I keep going at the same pace. It becomes more and more accurate the more data values you have. So when you're first starting out, it may be a little inaccurate, but as you go, it will become more accurate. If you're just starting, obviously delete the previous values that are not relevant to you and obviously change these values to make sense for you. And then I just kind of update the current month by, say we've gone into December now. I just kind of bold the current month so that I'm just on top of it. But yeah, it's very simple. And it's just a great way to kind of keep track of your dividend income. So you can see that's what the chart would show. And you can see how that works there. And then you've got your average yearly income as well, based on how you've performed. And then over here, we have the actual monthly income, which is just this line, just plotted on its own so that you don't have this in the background. But this just gives you the kind of overall view of how your dividends are performing. The reason that I really like using this, and then this will show you the total value based on your actual income that you've earned overall. The reason that I like to do this, because this isn't super necessary. I mean, if you're just reinvesting all of it and you don't really care, might not matter to you. But this is extremely encouraging to me because I see my dividend income going up every single month. And if this is accurate, this gives me a lot of motivation and encouragement to keep going forward and making more and more and more and more money. Again, this is pretty straightforward. You just you find out the dividends based on wherever you're getting them from. You add them all up for the month, and then you just put them in here. Same thing for whether it's crypto or it's regular stocks. You're going to do the exact same thing. So I have my crypto here as well for crypto that I'm staking and lending, earning passive income from. Again, always make sure to convert it so that it's in the correct value, because I'm viewing all of this in Canadian dollars. Just obviously list it all in the same value so you're not confusing yourself. And that's pretty much it. Just update this as according to what you've been earning, or, remove things based on where you've been earning. And, say you started in June here. So we get rid of all this previous data, and then you just want to update this so that it's only taking the data from the most recent. So what you would do here is you would right click and you would edit the data. Or rather, sorry, you would select the data. And we would just remove the data from the months that are not relevant. So you can see here, all the way down to May, we're going to remove. And now it's the correct values. And then as you get further past, like once you get past here, you obviously have to add those months in. And to do that, again, you go to select data, and you would edit to include the other months. So it's only going to 34, which is December. But now we want to track until June 2021. So we just type in C40 and then we update. So now we've got from June to February 2021. So you would actually have to update this to be where you need it to be. So if we're going from June, we change it to 28. That's how we do it. And then we add all these values back in. Yeah. Okay. Sorry about that. That was a little confusing. So that's how you would do it. Yeah. So hopefully that explains that. Maybe I'll explain it a little bit more succinctly when I do it with my blog, but I hope that makes sense. I know this is a little confusing, but if you're good with Excel, this is going to be a lot easier. The reason that there are paid and premium models and things like that is because this is a little bit confusing. And while I have no professional experience with Excel, as you can see, I was fumbling around a little bit. It's not super, super hard once you get an idea of how the cells and the formulas work generally. Because you can just kind of edit things until they make sense for you. All right, so that more or less covers the crypto and dividend income side of things. Let's take a look at the final template, which is my budget template. So this is pretty straightforward. At the top here, you've got the year. And then you've got all the generic expenses that you might include. So the reason that I have all these laid out the way I do is because the green is pretty much something that you need or you're probably going to need, and everything else could potentially be cut back on. I've also got business expenses for myself and, for anyone who wants to include that. And then on the right side here, I have my limit, like I can't go over this, otherwise I'm going to be taking away from my investments. And this is what I've set aside. Anything that you type in here will populate to these, and then it will show up at the bottom, and everything will populate as needed. For me, I don't spend more than $28,775 max per year in expenses. So let's do an example. Say you pay, like us, we pay $135 a month for internet. And, if you pay a yearly total, maybe you want to use the yearly total, but it's easier to track month over month. And then you can actually add every time that you pay. So, say you've paid. Okay, I'm going to get rid of these because they're causing problems. So say you paid twice, your actual total is now $270. But for the full year, you expect to pay $135 times 12. You expect to pay $1,620. So this gives you your actual estimate. This is my limit in case there's any issues, but this is the actual estimate. So when I actually make a payment, I update this, but I always know the estimate of what I might end up paying for the year. So my phone bill is $75. So, I've paid 2 phone bills. We're at $150. But I know for the year, 75 times 12 again, that's $900 for the year. So in my budget, I have $950. Maybe there's something that comes up. I always leave a little bit extra in the budget to cover things just in case. But the estimate is going to be much more accurate to what you actually end up spending. So yeah, my rent is $650. And, say we paid 2 months of rent again. It's $1,300. I don't know why I was going to do that math. And then for the actual full year, $7,800 for the year. So you can start to see how this is playing out. This is the estimate for the year. This is 2 months into the year. This is what I'm paying every month. This is how you will go through and add all the things to this sheet, and everything will update accordingly. You'll be able to see, the values for, this section, and then the values for this section, the values for the next section. And at the very end, it will all be added up together. So I don't have many yearly expenses, maybe like Amazon Prime, things like that, right? So it really just depends, how you want to budget everything out. But a lot of these things are pretty straightforward. You add in all the things that you need to add. The funny thing is these are all pretty much the exact values that I do pay because I'm so on top of my expenses that I know it like through and through. This is actually more like 300, but this gives me a really good idea of then how much money I'm spending. So my monthly expenses are more or less $1,600. I have 0 travel expenses, 0 haircut. It's hard to break down certain things like cleaning supplies or hygiene products. So I usually don't have a monthly value for these. Instead, I just keep track of the actual values. So say, I spend $150 on hygiene products for the year, or at least I think I'm going to. I'll put that in the estimate. But if I actually spent that, then I would update to say that. And, say I think I'm going to spend $100 on supplies, $50 on cleaning supplies, $250 on the gym. This is just a good way for you to estimate how much money you're going to need, regardless of what you're actually spending, right? Because then say maybe you only actually spend $175 because the gyms were shut down or whatever it happens to be, you got a discount. So then you update the actual values versus the estimates. Getting everything laid out, like the estimates, all that stuff, is just very helpful to you so that you know what to expect. And then you have a really good baseline for the next year. You could probably update this to be the estimate for the next year once you've got a really solid year of all of your expenses tracked perfectly. Now we start to get into things that I've marked these in orange because you could not spend money on these, right? You don't necessarily need medicine. If you've already got all of your medicine and, you don't get sick, you probably wouldn't need any. But, say you got $100 set aside for cough syrup and all that stuff in case you get sick, and you like celebrations, but it's, a quiet year. So maybe $150 is estimated for celebrations, Christmas, trading gifts, stuff like that. I barely spent any money on clothing. So let's say I spent an estimate. I'm going to estimate that I would spend $150 this year. Oh, but then I accidentally spent a little bit more, $250. So This is just the actual value versus the estimated value. And again, you can do this for literally everything. This is just how I've laid everything out. Like I say, these are necessary extras, but I mean, I don't have any travel expenses. Well, actually very, very small. Sometimes I take Ubers. So let's estimate this to be like $250. But I cut my own hair. So that's absolutely zero for me. So I could remove this, but if I go to a wedding or something in the future, I'll probably get a haircut just to be a little bit more proper. The orange though is stuff that I'd rather cut back on if I can. Emergency supplies, if you're stocked, if you're good, you don't need to buy more. Electronics are expensive, so obviously try to keep that low, but obviously you have to replace batteries, things like that. If you like drinking tea and coffee, you could cut it out, but I say they're necessary extras because I would not cut out coffee. But then we have things that are completely discretionary, right? Netflix, Amazon Prime, Spotify, alcohol, tips. Not that I think tips are something that you don't have to do, but you can definitely tip less or more. So I consider that somewhat discretionary because, you could be super generous or you could be super stingy. That's your own thing. But that's just where I've listed it. Misc luxuries. So, cigars, massages, things like that. I have it yellow because you could easily cut back on this and you can cut back on all these, but I have them yellow because I know most people won't. And this is kind of like a necessary evil. While these are all completely discretionary, the point is to show you that you could cut these out if you were struggling to get by and you were literally like not able to afford food. Obviously, you could cut all these things out. But if you still want to enjoy your life a little bit, I understand why people might use these. But then when we get into red, these are things that are, in my opinion, easily cut out, and you should cut down on these as much as possible if you're struggling. Only if you're struggling, because I have charity listed here, and some people might be upset that I put that in, something that you should cut out. But if you're struggling to pay your rent, you should not be giving money away to charity, because if you can't get by, then how will you ever donate to charity in the future, right? If I can get really wealthy and then I can donate a bunch to charity, that's going to be much more effective than me giving them $5 today and not being able to give them any more money ever again. Also, you can donate your time. So, that's something to consider. But things like buying upgrades to the home, just things that you should absolutely not buy, but obviously you still want to have that in your budget so you're aware of it. Miscellaneous things that don't fit into other categories. Junk food, eating out, really not necessary, really should be avoiding that. Video games, I mean, I will splurge every now and then and get a new video game. I mean, Cyberpunk is going to come out in the next month and I'm definitely going to get that. But if I could, I would want to be cutting back on how much I'm spending on video games. And if I had to, I would rather have like Netflix or Spotify than video games. Because again, this is also way cheaper. And you could do family plans and all this different stuff to have it like crazy cheap versus like, buying a brand new video game for $80. You play it for a couple weeks and then you're done with it. That's going to take a lot of your money really, really fast. So I also have leisure, which could be more or less the same thing. But just anything that you don't necessarily need to do, but you enjoy doing. Gambling, you probably shouldn't be spending any money on gambling, but I know people will. So, obviously have everything here that you're going to spend on, regardless if you want to or not, because you should always track that. But it's actually really effective to, see that you're like, okay, I'm only going to spend $100 this year on gambling. And then you end up spending $1,000 and you're like, wow, $1,000, I could have saved so much money if I just didn't gamble. And then maybe next year you get it down to 500 and then the next year down to 100. And then you say, let's just stop gambling. And you just remove that expense. Because once you get hyper aware of your expenses, it becomes much easier to cut back on different things because you can see how much of a difference that's going to make. And once you've got everything tracked out, it's effective because then you can see exactly how much money you're going to spend for the year. So for me, it's like $26,000 or so. is what my total estimate is, and my actual expenses is like $25,000 for this year. So it's very accurate, and it allows me to then look at my income. It allows me to look at my income and say, okay, if I'm spending $25,000 this year on expenses, no matter what, but I'm going to make $60,000, then all the rest of that can go to investing. No questions, like no ifs, ands, or buts, right? Not, oh, well, I've got a little bit extra and then I can just, up my gambling and I can up this and I can up this. It's like, no, if you stick to the budget, you're going to do so much better with your investing. Mind you, of course, you can balance things out and change things around as you need to, but it's going to be much more effective for you to not do that, to stick to your budget and then invest the rest. That's what the other templates are for. So I have some other things for like business expenses that you might want to include or, do your own. You can obviously add things, remove things. If you have no business expenses, you could just remove this whole section. I've also got like financial expenses. So like bank fees. Ideally though, you would have enough money in your bank to avoid bank fees, PayPal fees, ATM withdrawal fees, and then say you got rid of all your bank fees, you have a certain amount of money, you're never going to dip below that, then you could move that to finished expenses. And the only reason why you would maybe want to actually even bother keeping your finished expenses or expiring expenses is so that you can see how effective you were this year at cutting down your expenses, because it is definitely effective. On my current budget, I've got about $2,500 in expiring expenses, meaning that next year I'm going to have $2,500 more, or rather, I'm going to spend $2,500 less on expenses. And given I make the same income or more, I'm going to have $2,500 more to then invest to make more money. Then you've got, just the totals for everything. So that kind of sums this up. This is just what I've been doing and how I've used this template. You can do obviously whatever you want to do, but I think this is an extremely effective way to track your expenses. I'm sure there's apps for this. I'm sure there's many different things that do the same stuff, but this is the easiest, simplest way to do this on a spreadsheet. I have this on my computer and I have one on Google Drive so I can edit it on my phone as I need to. Obviously, do whatever you need to do. A lot of people use their phones these days, so probably something that you can edit on your phone. But again, this is going to really, really help you get a full view of your expenses so you know exactly where your money is going and how much money could then go to your investments, because the golden rule that I've been telling you guys time and time again is if you can somehow manage to save 65% of your income and invest that for 10 years in a row, and given you're not investing in like awful companies and cryptocurrencies and things, given you're investing in good fundamentals that are going up an average of 5% or so a year, 5 to 6%, and you're getting passive income from that, you could then retire after 10 years and live on that passive income if you can keep your expenses the same. Ideally, I'm trying to cut down on my expenses every year if possible. People already think I'm insane for, the amount of things that I've managed to cut out, but I still strive to do more. And I look at this every single day at the end of the day and I think, what can I do differently, as well as updating the values for anything that I spent during that day. I think it's very, very important to look at your money this way. I'm sure some people or many people are going to think that I'm way over the top with how I do this, but I was also able to save $50,000, well, rather grow my investments by $50,000 in just 1 year. And if that sounds impossible to you, it's not. It just takes a lot of diligent sacrifice. And obviously you have to make more money to be able to make this happen. However, I was making less money when I originally started. And then once I got to a certain point where I was saving so much, then I was able to then focus on, okay, how can I maybe make money in other ways? I've been making money through this podcast. I've been making money through a lot of different things. And I've been sharing that with all of you guys as well. But this is the best way to do this. regardless if the market tanks next year, whatever happens, I'm still going to be saving as best as I possibly can and investing as much as I possibly can so that I can retire as soon as I possibly can. And it's not that I'm actually trying to retire in the sense of like never doing any more work. It's more so that I will have money to cover my expense so that I'm able to pursue anything I please. If I decide I want to take off a year and just write books, then I can. If I decide that I want to make 5 videos a day, I have that capacity because I don't have to worry about my full-time job. But that's only going to be possible by ensuring I have a lot of passive income coming my way to cover my expenses. You could do lump sum investing. You could invest and have growth stocks and then sell them all at some point and take that money. But I think it's much more reliable to have passive income and passive income that also reinvests into these stocks and these cryptos. And then it kind of compounds interest. So I think that's a much more effective way to build wealth over a very long period of time. And I dollar cost average in, whereas, some people are more, they like lump sum investing where you save up a bunch of money and then when the market looks really good, you make buys on certain things. While that's a great way to do it, you could time the market poorly, whereas with dollar cost averaging, you're getting the exposure to the great, like the big dips in the market and the rises. So at the end of the day, I think dollar cost averaging is the best method because your money isn't being affected by inflation because you're just putting it all into the market every single time rather than holding on to it and waiting. You're getting the compounding interest from the dividends. You're getting dividend appreciation and stock appreciation or crypto appreciation. But the point is that over a long period of time, if you're investing for a very long term, dividend investing and dollar cost averaging into that is probably one of the best ways to do that. And I found that to be the case. I mean, Bitcoin and Ethereum have made a large portion of my gains, but now I've been dollar cost averaging into Bitcoin and the stock market every single paycheck, basically taking the majority of my paycheck every single month and putting all of that in to stocks and crypto. And I will continue doing that for hopefully the next 9 years or less, and then retire and let my investments continue to grow while I focus on other endeavors when I'm turning 35 or earlier. So that's it. This was very, very long. I know I fumbled around a little bit with some of those spreadsheets. So hopefully this is still, very succinct and it gives you a really good idea of how to do this. I know it's a little complex with some of the conversions and things that we were doing before. I think if anything, the budgeting template is by far the most straightforward because there's not really any formulas being used here. This is just like the simple way to use this. If anything, maybe I just cut this up into just being a budgeting template video and then I have another video for the other ones. Maybe that's the simplest, but I'm going to take a look at how long this was and then we'll go from there. But let me know, how are you guys budgeting? What apps are you using? Same for investing, tracking investments. What all are you using to track all this, to do all this? Did you find these templates useful? Are they too confusing? If you have any questions, obviously let me know and I will do my best to answer all those in the comments below. And as always, thanks for watching.